Turbo Trading with head trader Robert Knight, MBA.
This is a video on trading stocks on both sides of the markets, both long and short. Intraday. Now, and as you can trade any stock long and short in the same day, just based on the patterns. And you can get good moves on both sides for sure. There's no doubt about it. I mean, DWAC 5-wave move up, came down at the apex of the wedge, collapsed. There were some big moves in that. RDW, we did a video on this earlier today about the Twin Towers pattern, and then came off. One of the dangers of trading both ways is that if a stock is in this market right now, I mean, stocks are selling off, so they tend to come off. But if it's a big bullish trend, the S&P today is, I don't have it here. The SPY, is down 1.6% today. So if a stock has a pop, you would think that there's going to be selling into it and it's going to back off. So if you're trading from the long side in a downtrending market, chances are that you'll get a good pullback. If you're trading stocks from the long side in a strong bull market, your pullback might not be that much, and if you do get it, the short squeeze could be quite violent. So that's the only caveat that you have to be careful about. But look at RDW, for instance. Was strong in the pre-market, sold off sharply, then boom, had this big quick move up. But we see up here it had that Twin Towers pattern, which we did the video on. You see that you can go short. If you can find the stock, you can go short. Now, one of the problems is you don't know how far it will go down. But if it's a downtrending market, if it's a soft day in the marketplace, the tendency will be for it to drop much further. A stock like this was probably just the chat rooms pumping it up. And then up here, they blow it all off. The lead guy says, I'm selling my stock. Everybody tries to get out of it. Then there's nobody left to support the stock. What happens? So you can short it when you see a short pattern. Here, you buy it on the long, and then when you see the short pattern, you go short. And it came down, popped up to it, failed, and got into a downtrending channel. This is a perfect chart for a short sale. We're day traders. We don't care one way or the other if we go long or short. We just trade what the trend gives us. So if you're in the market, there's two sides to the transaction. There's a buy side and a sell side, and it makes no difference which one comes first. There is a certain subset of the traders that don't like people that go short, but what do we care about anybody else's feelings? They're not paying our way. So it's not immoral, it's not illegal. You can go short, and you can short stocks that give you a clear signal to do that. And here, and this is where you got it. So when it popped up here, you could have been shorting it at the 6.5, or here where it broke down 6.35, and it traded down to 5.75. Then it started to bottom in here. So this is probably the shorts looking to maybe give it some support. It's on the 200 period moving average. Did a little pop, pulled back, held the support, and then the shorts get squeezed. Now, would I trade this again? It's midday. You're probably going to get the midday fade, but you don't know how much it's going to be. DWAC gave us the same thing. Look at this nice 5-wave move up. 1, 2, 3, 4, 5-wave move up. Big long wick up. Candles are red there. It got into this bear, into a wedge pattern, which is it's a bearish pattern. After this 5-wave move up, and near the apex it collapsed, so you could look to short that at 83.50. Now it all depends. One of the things is you have to reserve the stock, because a lot of these stocks you're not going to be able to just go short because there's not enough float. So you have to reserve it, and there's a cost to that. So that's another sort of negative to trying to trade these intraday. It's much easier to trade long, and then after it's over, just go away. But you can. I mean, this is a good short here where it broke down out of this wedge pattern, dropped down. I mean, that was a $4 or $5 move to the downside. $4, let's call it. held support, got up to VWAP, failed. You could look to short it again. Held the 200 period moving average. You could look to go long there. So you can trade these on both sides, but it is difficult to change your mindset. If a stock is strong, it's difficult to all of a sudden go the other way on it. I don't tend to do that. If the market is strong, then I go long stocks. If the market is weak, I go short stocks. I don't normally trade myself both ways. And I don't normally trade the less expensive stocks on the short side or on the short side because it's just difficult to borrow. That has to be your game. You have to be a short. I think you have to be a short seller. If that's your strategy to sell stock short, you wait for these runs and then you short the stocks, because then you're set up to look for the borrows, to put in the borrows for it, to think about trying to find shorts, on DWAC here when it's coming into the apex of the wedge in case it goes your way. It's much more difficult to find the stocks like that, but you can do it for sure. There's no reason to not trade both sides of the market. Lots of people do. I tend just to buy in the morning, catch these runs, and then midday I don't normally trade. But this would have been a great fade, and this is an absolute pattern that shows it. And we see those patterns all the time where I say, it's a big spike up, close the bottom. I say, if the next candle's red, you need to get out of that trade. Well, that's a perfect short sale right there. That entry is a perfect short sale. Now, the problem is you don't know how far it'll go down. But normally when you get that pattern, they do take a significant drop from that level. But again, you have to find the stock to short.
Don't forget to like and subscribe to our channel. Reach new levels of trading proficiency. Become a member at turbotrading.biz.